Okay. Okay, I got a text message that Ms. Damitha, RDB General Manager, just joined. Mr. Damitha, thank you very much to come in. Thanks. All right. Okay.
Thank you. You are most welcome.
Thank you so very much. Okay. All right. DG Ken is joined. Sabi. Manohari, Sabi, and DG Ken joined.
Junkyu, I'm trying to see whether they are there. I don't see them in the list as yet, but I will send a reminder to Sabi definitely.
Wait. Oh, I see that the DG Ken just joined.
Okay.
Yeah. All right. Okay. Okay, its time is up. So let me say thank you to everybody. Good morning, good afternoon, good evening to around the world and to our colleagues. Here is Manila. We have a very good weather this afternoon. Fortunately, very fortunate, and we don't have any rainy day today. Usually when you have a rainy day, the internet connection was disrupted. So we kind of have some sort of normal expectation. But today, because of very good weather, and I think we're gonna have a very good the communication today also. I'm pretty much sure, and also I keep my fingers crossed for that. Today is very meaningful, and because of the topic itself, it is it is the joint webinar, especially SAPF and FSG, for specialized institutions to facilitate SME financing. This is part of the series, and we have been working since the pandemic erupted last year, especially focused on the series of the SME financing. So SME credit guarantee scheme, it was the first webinar and we held the last year right after the pandemic. And then we have a SME credit guarantee scheme policy brief and currently at the final stage and to be published. And then we are also working on the SME, the lending and also SME credit insurance. So today we have a special session of this webinar for the SME lending scheme. And I'm very happy to introduce our DG Kenichi Yokohama, Director General, South Asia Regional Department. Let me just quickly introduce him. And he oversees the operations of the 7 sector divisions and the 6 country offices in South Asia regions, as well as regional cooperation initiatives. The 6 countries include Bangladesh, Bhutan, India, Maldives, Nepal, and Sri Lanka. He joined ADB in 1999. Early in his ADB career, he was assigned to project operations in South Asia, covering the water resources sector. Between 2012 and 2017, he served as a country director for Nepal Resident Mission. In 2017, he was appointed as a country director for India Resident Mission, where he stayed until April 2020. He's a national of Japan. He holds a master's degree in agriculture economics from Stanford University, USA, and obtained his undergraduate degree in agriculture engineering from Iwate University in Japan. Let me introduce DG Ken, and please, DG Ken, please give us opening remarks. DG Ken?
Thank you, Junkyu. Can you hear me?
Yeah, I can hear you very clear.
Thank you very much for this introduction of me. So good afternoon, colleagues, and warm welcome to our particularly distinguished guest speakers and to our discussants, Professor Jae-Jun Han, Professor Robert Cole, and Ms. Damitha Ratnayake, the CEO of the Regional Development Bank of Sri Lanka. And also welcome to all of you to this webinar on government SME lending schemes. This is the joint effort between the Finance Sector Group in SDCC and the South Asia Regional Department. And the webinar is part of a series looking at SME finance and its role in growth in Asia's developing countries. So we all know that SME enterprises are crucial for economic development. SME account for more than 90% of all firms and for more than half of employment around the world. So we know that accelerating the SME, vitalizing SME is really a true engine of economic growth in South Asia and other Asian regions, and also provide much needed employment. And we also know there are models like Korea and Japan, also comprising the SMEs are driver of growth in economies. So the emergence of the coronavirus over a year ago has really compounded the challenges surrounding SMEs. So lockdown affected these SMEs and slashed their sales, layoffs, and disrupted supply chains. So we know that the damaging effects are much worse than the global financial crisis, and impacts on SME operations are quite worrisome. And worse, they raise the perceived risk of lending to the sector among banks and others. So many financial institutions were already disinclined to offer credit to those firms, given their often weak collateral and insufficient operational information. So but on the other hand, now we start to envisage the economic recovery. We should take this crisis as an opportunity for boosting or revitalizing SME investments. There's a much opportunity here for ADB, and also this COVID-19 also seems to be prompting the restructuring of the global regional supply chains. So there will be an opportunity for us in our regions to tap this opportunity, help SMEs to restructure themselves and link to the restructured global supply chains and expanding the linkage to domestic market, so that they can really take this opportunity to revitalize themselves and contribute for the inclusive economic development. And in this context, the SMEs do need finance, and this is a critical constraint for us to support SMEs to tap these opportunities and challenges. For this, I understand successful cases in other countries that have overcome the impediments to SME financing offer a few valuable lessons and potential solutions for Asia's developing economies. A couple of points that I, thanks to Junkyu's team, would like to emphasize. Firstly, the government can set up specialized banks with clear mandates to provide credit to SMEs. The Industrial Bank of Korea is one such institution. And second, authorities can set up government-sponsored entities to provide loan guarantees to SMEs that apply for credit from traditional financial institutions such as commercial banks. For this, U.S. Small Business Administration is a good example of this sort of organization. And further, we have witnessed efforts to promote SME financing using digital technology. These new technologies not only allow SME easier, cost-efficient access to financial services, but also enable financial institutions to accurately assess SME creditworthiness and efficiently monitor and manage their risks. And I think in this context, there could be a lot of space potentially for Fintech industries to come in and fill in the gaps where the former institutions have not been able to provide outreach. So this afternoon, we're examining how these two government institutions have helped SMEs improve their access to credit in their respective countries. We'll also look at how they are incorporating digital technologies into program-supported SME financing. So operationally speaking, I think in South Asia in particular, and I think other regions also, this COVID-19 recovery process is also prompting us to shift our, reprioritize our programs. And there is increasing demand to step up our supports to SMEs in terms of linkage to the global regional supply chains, providing necessary finance and credit guarantees. So we have a good project in Sri Lanka advancing. Also a request coming from India, which I was told that India MSME minister is pretty much chasing us hard for early delivery of excellent project programs. So there's opportunities quite high here for us to learn from these lessons, and I will be quite happy to further work with our team to reflect all these best practices and good practices suitable for South Asia and other regions to be reflected in our forthcoming programs where ADB should really come forward very strongly. So with this, I thank you very much for this opportunity and look forward to very productive interactions. Thank you.
Thank you so very much, DG Kenichi. I think it is very insightful and then full of energy, high energy boost and giving us, and also high spread and for us to move on. Thank you so very much. And also the contents, we really appreciate your very insightful contents. So building on the boosted energy and provided by our DG Kenichi, let me just provide a quick suggestion to everyone. And we're going to have some sort of razzmatazz event that is group photo. So let me give a microphone to Michelle and to direct us what we're going to do right now. Michelle?
Thank you, Junkyu. May we kindly request everyone to please turn on their cameras. Okay, I'll just take a quick screenshot of you. If you can, there, 1 second.
Michelle, can you render us with the counting 1, 2, 3?
Yes, I'm just enabling the large gallery option so you can take more photos. Okay, 1, 2, 3, smile. One more, Junkyu, just to be
One more.
sure.
Okay. I
1,
just
2, 3,
discovered
smile.
that maintaining 5 seconds per smile is not easy.
Okay, that's it. Thank you.
Thank you. Thank you to everyone. Okay, you can turn off to save our bandwidth in this digital world, and saving bandwidth is very important, as you know. So let me just, give us a quick snapshot of what we're going to do. Session 1, the title is Public SME Financing Institutions in Korea. So Professor Han, Jae-jun Han, Department of Global Finance and the Banking College of Business in her university, and he's providing the very good the research presentation on the Korea's case, focused on the role of public financing, especially specialized for SMEs. And once he does 25 to 30 minutes, I hope that it's 25 minutes, but you have a 5-minute buffer. And then we're going to go to the discussants, and Mrs. Damitha, CEO, Regional Development Bank in Sri Lanka. And then we're going to have a Q&A session, and then we'll move on to second session. This is another case study. This is another one of the best practice, and the case on the U.S. Small Business Administration, and by Professor Rebel Cole, Finance in the College of the Business and the Florida Atlantic University. And also we have a discussant, our dear colleague Manohari, and will be joining as a dear discussant. And then we're going to have a Q&A and then wrap up. This is what we're going to do today. So building on the boosted energy provided by DG Ken, and let me introduce Professor Han. Professor Han is a finance sector specialist with a long record of the working on policy finance, including SME and low-income financing. He holds a PhD in economics and financial economics and industrial organization from University of Texas at Austin. He also has a bachelor's and a master's degree in economics from Seoul National University. He started his career as an economist in the research bureau at the Bank of Korea since 1996. After entering a doctorate in economics in 2006, he worked in the capital market department at the Korea Institute of Finance. He's the head of finance at Inha University. He has a lot of experience working in public-private committees, public enterprise evaluation teams, and Korea Public Finance Bank Management Budget Deliberation Committee and Small Business Finance Policy Committee. And we are honored to introduce Professor Jae-jun Han. Professor, you have the presentation.
Yes,
right
I'm
now.
here.
Yeah, please go ahead.
Good afternoon, everybody. It's my honor to present Public SME Financing Institution in Korea at this FSG and SAPF webinar. I'm right. And next slide, please. Let me talk about background of difficulty in SME financing. First one is information asymmetry. As you know, there is information asymmetry between lender and borrowers. Thus, the lender requires collateral to supplement weak credibility of SME borrower. Furthermore, the bank tends to impose high interest rate considering high default probability, which becomes a concern of SME in terms of borrowing cost. Finally, financial regulators, supervisors put strict regulation on the loan to SME. Next slide, please. Now we're gonna look at SME financing in Korea. Korea, at the government level, it built SME support system. Among them, one of the major pillars is IBK, Industrial Bank of Korea. Before I introduce IBK, let me briefly describe policymakers' response to recent change in Basel Accord. Next slide, please. As you know, there is a change in Basel regulation, and the introduction of Basel II and Basel III regulations had adverse impact on SME lending. This called for regulators, domestic regulators, to implement a number of measures to support and facilitate SME financing. First, finance institutions have been allowed to use collateral and credit enhancement, such as government guarantees. Second, for SME exposures less than 1 million euro, the concessional risk weight is down 75, providing a relief from previously 100% unrated risk weight. Thirdly, banks that adopt an internal rating approach were provided an adjustment in the correlation formula for SME with total sales or assets, the volume is below 50 million euro. Finally, a new category, general corporate SME, was introduced. Next slide, please. For these regulatory changes in Basel, several issues raised to domestic regulator. First one is for weak internal rating model. In that case, SMEs end up getting 100% risk weight regardless of years of cash flow and business performance. Second one is provisioning requirement for a secured loan is cheaper than an unsecured loan. Those SMEs that are unable to provide eligible collateral against loan exposures are charged with higher risk premium. Third one is the introduction of liquidity and leverage requirement. The liquidity and leverage framework demands high quality and liquidity asset to the bank, the lender. Thus, Korean Financial Service Commission, which is a regulatory body, responds with new classification of SME. Firstly, it expanded the scope of SME. Previously, SME defined with the volume of sales less than 60 billion Korean won. Now they expand it up to 70 billion Korean won. Secondly, they expand the criteria for becoming SME. Previously, SME is recognized by only total sales. Now it includes total asset as well as total sales. Third one, to eliminate disadvantage for new companies. For example, a general enterprise was not classified as SME, but domestic regulatory change, it is included as SME category now. Due to these kind of changes provisions, about 9,000 corporate borrowers were now classified as SME, and their risk weight on loan portfolio is down to 75 from 100. As a result, capital burden of lenders, which is bank dealing with SME loans, has been reduced, and which improves lending capacity for SME. Next slide, please. Now, let me mention about SME support system in Korea. Left-hand panel, please look at left-hand panel. At the beginning of economic development, the Korean government focused on developing heavy and chemical industries. Thus, economic power was concentrated in big conglomerate, not SME, which the Korean government recognized was not so good, and thus tried to foster SMEs as a countermeasure to pursue balanced and inclusive economic growth. The Korean government has since passed a law enhancing both governmental and private support to SME. If you look at the right-hand side, in figure, the left panel shows Korean government as a top, right below, Minister of SME and Startup, and KBIS. For the right-hand side, you can see the execution vehicles. IBK comes to the top. The others are SBC and Korea Credit Guarantee Fund and Korea Technology Finance Corporation. Next slide, please. This is a brief summary of IBK. Let me move to the third line in this slide. To overcome the impediments to SME access to credit, Korean government sets up a specialized bank, which is IBK, to provide credit to SME in 1961. It has Ministry of SMEs and Startup, which is mandated to develop and implement government policy for promoting business growth, fostering startup, and supporting micro, small, and medium-sized enterprises. The ministry collaborates with 9 SME-related institutions. Among them, 2 institutions, as you may know, are IBK for financing and Korea Credit Guarantee Fund for credit guarantee scheme. IBK is required to allocate 70% of its loan portfolio to SME under the IBK Act. The Korean government also enables IBK to issue small and medium industry finance bond. I will call it SMIF bond separately, with a government guarantee of interest and principal repayment, because deposits alone are not enough to raise a fund. IBK also provides consulting support to SME at every stage of their business, in addition to financing. Furthermore, IBK Finance Group constituents provide non-bank finance service together nowadays. Next slide, please. I'd like to introduce IBK at a glance. For the left-hand side figure, about government ownership. IBK nowadays listed in a capital market. Nevertheless, 61.9% of share comes from government. And IBK Act defined the purpose of IBK at Article 1. It is to promote independent economic activities of SMEs and enhance SMEs' economic position in the national economy. For governments, President of Korea appoints the President and CEO of IBK according to Article 26 of IBK Act. And government approves IBK's annual business plan regularly according to Article 35. And enforcement of lending to SME is 70% of total loan. And there is solvency protection from the government. Article 43 stipulates that government shall provide funds to cover IBK's deposit. And Article 36.5 stipulates government may provide guarantee on the payment of interest and principal of IBK bond, which is SMIF1, subject to approval from National Assembly. Next slide, please. Now we're gonna look at loan portfolio of IBK. From the upper panel, left-hand side, if I break down the loan portfolio as of 2018 first quarter, 78.9% of IBK loans were for SMEs, and 22.6% shares of country, it corresponds to 22.6% share of Korea's SME loan market. Now, I'm going to look at the composition of SME loan of IBK. 78.6% were directed to size of 0.5 million or less, and roughly 90% for firms with 10 or fewer employees, and 60% of the loan were for the manufacturing industry. From the lower panel, we can see unsecured loan compose high portion. As of the first half of 2018, unsecured loan comprised roughly 33% of SME loan portfolio. Next slide, please. Now it is about funding structure of IBK. IBK's funding consists of both deposit and SMIF bond. SMIF, which means small and medium industry finance bond, compose roughly 50, strictly speaking, 47.5% of total funding in 2019. In addition, 60% of SMIF bond were sold through the branch network, through the window, and the remaining 40% through the capital market. Branch network account for high share because as the SMIF bond are not subject to deposit insurance fees. These can give customer a higher interest rate than the normal deposit rate, interest rate. Next slide, please. Now I'm going to talk about the major role of IBK. There are 5. First one is to foster economic growth through SME development. Second one is to overcome market failure in 2 perspectives. One is caused by information asymmetry. Second one is to provide a safety net for SME in every financial crisis period. Third one is to provide financing product. Here, I'm going to look at the scheme of finance product and representative product. Next one is to provide comprehensive consulting service. And last one, I'm going to talk about how to set up risk management specialized for SME financing so that IBK maintain low delinquency ratio and it can provide good rehabilitation support to SME. Next slide, please. First one is fostering economic growth through SME development, right? For the left-hand side, the figure shows the growth of asset size of IBK through the period. As of 2016, the total asset size of IBK is 259 trillion Korean won. IBK has played an essential and pioneering role in the industrialization and economic development of Korea through its finance support for the growth of SMEs. It is only de facto policy bank responsible for directly funding SMEs, and it has contributed greatly to the number of SME, to the number of employee, and the proportion of SME in GDP. As such, IBK's SME clients have grown steadily, reaching more than 1.4 million. It accounts for 35% of SME in Korea in 2017. Next slide, please. Now, overcoming market failure, it has 2 sides. First one is to resolve information asymmetry. IBK systematized information on SME over a long period of time. This enables IBK to develop specialized financial product for SME. IBK's share in the unsecured SME loan among Korean domestic banks is roughly 40% as of April 2019. Second one is IBK's liquidity injection in economic turmoil. IBK's key philosophy is that it does not take away umbrella at the time of rain. It has helped to overcome economic downturns by expanding its loan along with the financial service to SME. The total net increase of SME financing was 19.3 billion by all domestic banks during 2008 global financial crisis in Korea. IBK played a crucial role in financing 17.6 billion of SME loan. It accounts for 91% of total net loan increase for SME at the time. Lastly, IBK provide SME financing during this COVID-19 hugely. Next slide, please. Now I'm going to talk about financial product of IBK. IBK has product scheme in 4 different business stages of SMEs. Firstly, in the startup stage, IBK is active in proactively finding and nurturing SMEs with fewer than 5 employees. Second one is the technical development stage. IBK provides R&D funding, commercialization preparations. To do this, IBK operates a separate division to evaluate the technology of SME. At the commercialization stage, IBK provides working capital, facility loan, and sales loan to SME. At the globalization stage, IBK provides resources necessary to SME through international aid fund, equity investment, and arrange IPO, overseas consulting, and etc. Now I'm going to introduce a representative product of IBK, which is network loan. Next slide, please. This shows a flow chart of network loan. Please go to the lower panel. Scheme of network loan is as follows. First, IBK undertakes network loan business contract with established buyer. And the established buyer must hold a credit rating of BBB or higher in order to sign this business agreement with IBK. And for this loan, buyer need to place an order to the supplier first, and then send the order sheet to IBK. Then IBK provides the supplier with a network loan, subject to terms of business contract. Interest in network loan is lower than regular loan because the loan rate is calculated based on the buyer's high credit rating instead of supplier's lower credit rating. This is in fact cross-subsidization. Next slide, please. IBK also provides comprehensive consulting service in addition to just financing. In 1962, IBK built the SME Consultation Center, which provides consultation and education service on finance issue, management issue, accounting issue, and taxation issue of SME. In the 1980s, IBK played a vital role in developing the operation and technological capability of SME, such as entrusting foreign consultants to provide on-site technical support. IBK also started to hold CEO seminar to reflect the current concerns of SME. In 1989, IBK launched a corporate information center to strengthening the existing functionality of SME Service Center. Let me skip this 1990. Let me move to the 1996. IBK launched the consultation service for M&A of SME. In 2015, IBK launched the SME's Hope Consulting Project The contents of it, you can see on the right-hand side down the figure. Next slide, please. Now I'm going to talk about risk management system of IBK. It has 3 stages. First one is pre-lending assessment. It is the decision-making stage before the loan is issued. The main system consists of pool of credit officers, loan approvals, and credit limit determination. Second one is interim review phase after the loan is disbursed. This is mainly divided into manual check and then systematic check. Third one is aftercare. It is the final stage of risk management of IBK. IBK handles SME borrower that is at the risk of bankruptcy. The key features of IBK's interim review consist of early warning system, credit monitoring system, and asset quality classification systems. Next slide, please. IBK shows relatively low delinquency ratio, considering high portion of unsecured loan to SMEs. It proves risk management system of IBK is in good shape. As IBK established a loan review system specialized for SME in the interim review stage, the criteria for judging the possibility of rehabilitation becomes different from those of other competing commercial banks, with the advantage of being able to more accurately determine whether SMEs are insolvent. Overall, risk management process contributes IBK's low delinquency ratio by 0.34% to 0.52% point lower than the industry average in the aftermath of 2008 global financial crisis. You can check from the table in the left-hand side. By the way, the differential does not differ significantly from the industry average in recent year. Nevertheless, IBK's special financial products such as win-win collaboration loan, which is updated version of network loan, which I introduced in a couple of previous slides, still record a lower delinquency ratio. Next slide, please. Current corporate rehabilitation support program. Let me introduce about this. There are 3 programs. First one is Change Up, which is so-called workout in Korea. Second one is Fast Track, and third one is Pre-FTP. Pre-FTP means Pre-Fast Track programs. These 3 different programs applied depend upon the corporate situation. And so, whether it is classified change-up period, fast track period, or pre-FTP is determined according to the SME's insolvency progress, as well as that complexity of creditor structure, and lastly, intensity of restructuring. And graduation rate of IBK is higher than that of industry average. You can check that from the table. If you look at the graduation rate, which is the third, column, in 2015, from IBK, it is like roughly 55. Industry average is 36. If we move to 2019, I don't have data for industry graduation average. If you look at 2017, graduation rate of IBK is 64 versus that industry average is 15%. So IBK operate very well in rehabilitation support program. Next slide, please. This is kind of an addition. This is supplementary about the digitization of IBK. IBK proclaimed 5 key areas of digitization. First one is to build digital infrastructure. Second one, they try to build non-face-to-face work environment. Third one is they want to automatize the business. Fourth one is try to build foundation of data handling capability. Last one is digitizing compliance system, right? And let me mention just two items. For the first one, building digital infrastructure, IBK pursue completely non-face-to-face corporate loan system, especially in Corona-19 period. They launched an exclusive app, which is called I1 Small Business for small business owner. They automated post-verification work for credit screening using AI system. Lastly, I want to mention the fourth one, to build the foundation of data handling capability. They try to establish big data platform, and they try to establish big data credit rating model based upon commerce data with the open API packaging. For example, after converting basic information and commerce data of seller in of e-commerce platform, they want to convert that into data necessary for loan examination. They can be used for loan examination later, right? I think that's all about my presentation, and this is it. And thank you for listening, everybody.
Thank you very much, Professor Han. And I think it is very well organized and also sharing very informative and insightful knowledge. And many things are discovered as new and to us. And we really appreciate this great knowledge sharing. I think it's right now is the time to invite our discussants, Mrs. Tamita Kumari Lashanyaka, and CEO of our Regional Development Bank in Sri Lanka. Let me just quickly introduce Ms. Tamita, Regional Development Bank, CEO of the Regional Development Bank in Sri Lanka. Ms. Tamita Lashinaka is the Acting General Manager, CEO of the Regional Development Bank, RDB, so-called RDB, Sri Lanka, where while she's also the additional Director General of the Treasury Operations Department of the Ministry of Finance, she holds positions of the Director of the Sri Lanka Petroleum Corporation and People's Bank of Sri Lanka. She had served as Acting General Manager of the National Savings Bank in the past. So she graduated from the University of Sri Jayewardenepura with a bachelor's degree in the business administration and obtained a master's degree in the financial economics from the University of Colombo and economic policy from the Australian National University. She's a well-known professional in the financial sector with high experience over a decade, both in public finance and the banking sector. So let me introduce Ms. Tamita and to share her discussions with us. Please come in, Ms. Tamita.
Thank you very much for the excellent introduction of mine. And also, we listened to a very concise and well explained presentation from Professor Han. So, in my presentation, not my presentation, in discussion, I'm going to talk about very few points from Professor Han's presentation, because there are some common points which we need to address in the process of SME financing, which may help all of us to go inside a bit more to these concepts. First one is pricing on collateralized loans. By nature, we know SME loans, most of these financing instruments are reaching the regional level and which are not much capable with financial background. So, as Professor well explained, I think from IBK side, it looks like collaterals are well undertaken within the IBK concept. I mean that within regulatory framework of the IBK. So, in the case of Sri Lanka, even collateralized loans are very pricing is a very big issue at the moment, because even if there are high price collaterals, the cost of the so can I ask a small question from the professor? Professor, what would you match the collateral pricing with the cost of financing at the moment? And from the other side as well, number 2 is financial regulations, whether it's enabling restructuring or whether it would further. Hello? Hope you can hear me.
Yep.
Are you asking me to answer?
Hello? Yes,
yeah,
please.
we can hear you, Tamitha. So do you want Professor Han to respond to your
Yes,
query
please.
right now? Right now?
Yes, please. If possible, then and there we can discuss and move ahead.
Okay. All right. So, but
can you
I can okay, I can
yes,
suggest
Professor,
that.
if it is possible, please. Yeah. Yes, please.
Yeah, I can suggest you continue to raise list of the questions, and then, you know, after you finish your queries, we can ask, you know, we can ask Professor Han to respond to your questions in a bunch together, not individually. How about that?
Okay, fine.
Right.
Yeah, excellent. Thank you.
Thanks.
That's my restructuring, or whether it such action. In case still as in a way has helped the SME sector in with positive impacts. As such, regulations came along with these pandemic. To certain extent, has provided the path to provide some kind of financial regulations for the restructuring of SME sector. Would it, in case of IBK, would further enabling the restructuring of SME sector? Number 3, my another question is, this is I am talking in line with Sri Lankan context as well. Some of the Basel III regulations introduced in between, even not only Basel III, even Basel II and III as well, has brought some insights to SME sectors which hinder the smooth functions of the SME sector, such as provisioning. Is there any some kind of like taking out of such provisioning and addressing such sectors in a different way, with some weightage for these collateral pricing, things like that? Is there any way to link together the impact of Basel III and take out the regulatory relationships against the pricing and collateralized loans? And also, we observed that at the IBK funding structure is very well structured through the government supporting and government blessings, unlike other countries, especially in Sri Lanka, because IBK funding structure basically comes through well structured and government guaranteed bond instruments, and in addition to they raising funds from market and government side. The other very featured and very interested topic for me was IBK consultant service. I think the SME sector should also embedded with these consulting services as well as credit guarantee schemes, because those are the lacking part in case of Sri Lanka. Because if to go ahead with some kind of SME project, I think financial literacy is very, very poor in case of regional sectors. And as it's very having a separate. So, in addition, special IBK special products. This is also another very eye-catching products and eye-catching program relating to this win-win collaboration loans from the IBK side. And these are some examples which we can take through the other countries as well and implement in other countries to support SME sector. Commenting these things, I would also point out some features within Sri Lanka and relating to this RDB side. At the moment, current national SME infrastructure in Sri Lanka consists with support systems. Could you please move to the next slide? Yes, thanks. Current national SME infrastructure in Sri Lanka is consisted Ministry of Industries and Commerce, Credit Information Bureau, rating agencies, Export Credit Insurance Corporation, Industrial Development Board, National Enterprise Development Authority, and Chambers of Commerce. Top of everything, Government of Sri Lanka and Ministry of Finance is regulating the authority as well as provide whatever the financing supposed to SME sector. This is done through the certain regulations, and also each and every year through the government budget, there are some kind of assistance provided to the SME sector, specifically like through the government budget, at least around 10%. Around 10% of the total government are addressing to different PFIs, such as there are some initiatives from the government as well in recent past. The most important milestone is with this credit guarantee institution, which is proposed even, and discussions are going with ADB. And Fintech also now has come to the scene. Central bank has the government innovation, Fintech and innovations and implement through the SME sector. So to avoid some kind of information asymmetries and minimize the asymmetries in between government and these lenders and borrowers, as well as digitalization of benefits through MSMEs. Also, government is planning to commence a national development bank through 2021. Because I think those are the structures. Mainly, we are focusing on one national entity, which will enable the entire country to address the capital funding requirement for this SME sector, in addition to the government support. Could you please move to the next slide? So, in government of Sri Lanka, within the government framework, Regional Development Bank is the apex body, which is leading SME sector within the government framework. It's a state bank, and mandate by itself has given as the improving of rural living standards by providing accessible and affordable financial services. So, we have excellent reach. We have island-wide 276 branches around the country, and 40% of the entire licensed specialized banks network in the country is serving by the RDB, which is around 6 million customer base in the entire 9 provinces. The highlighting part here is from 6 million, around 1 million is customer base as SME customers, from which 40% is collateralized loans, where balance 60% is all non-collateralized loans such as personal guarantees. Experience in financial institution in case of RDB. Even we are in this business of managing warehouses, financing schemes, and 6 warehouses, which supports the entire SME sector, especially in the harvesting seasons. And RDB is the first development bank, starting with doing credit lines with ADB, which provides both working capital and microfinancing loans. Could you please read? Next slide, please. RDB serving this SME sector with the support of ADB. At the moment, we have very specific projects which assisted by ADB. One is compliance with international regulations because vessel still requires capital. In that case, ADB has provided some capital supports through which will reach events in the subordinate issued by RDB. And also environment and social safeguard management established. There are some projects which are identified and staff is training through with the both financing and technical support of the ADB. And also we are getting very strong support from ADB in relating to distribution and increasing the both strategy focusing outreach of SMEs, including those like especially we are focusing on women empowering women and develop. There are still at the moment in hand we have some readily made available products which will reach the entire woman reach in a regional development space. And so there one of the feature which is embedded within ADB assistant project is capacity building of the women which are relating to engaging in SMA, MSME sectors. This includes training of trainers and training program also included within this ADB project. The other is capacity building of the internal staff. This is both in remote operations and granting loans. ADB is assisting RDB for the capacity development of the RDB employees. And also ADB supporting to strengthen the credit and risk management through policy process and reviewing the existing policies as well as reviewing existing credit scoring system. Next slide, please. This is the roadmap for SME development sector from RDB side. As I talk about, pricing is a very question at the moment with RDB and matching collateral pricing in relating to the interest offered to the borrowers. Therefore, now RDB is planning to promote non-collateral based lending in consultation with the government. So in this case, at the moment we have undertaken the staff training, and also we are giving high priority to the women focus with gender-based loan products. This is also part of ADB requirement. At the moment, SME portfolio around 40% is led by the women entrepreneurs, and also we are planning to provide products to the transitory SME client groups So this would be some staggered level, like a small level from micro level, because micro and small are defined in some different with capacities from turnover and employees. And also we encourage savings by MSMEs. This is kind of new project which we are trying to develop in and launch in relating to fintech products. And also enhance credit operations and strengthen credit risk systems. This is a kind of long-term project and which we are planning to centralize entire credit system. And also planning to continuous training of SME customers for mentorship development and staff for continuous skill and credit underwriting. Reserve Bank of Sri Lanka, that means Central Bank of Sri Lanka, also supporting RDB in relation to this development. And also we are trying to focus training of trainers to ensure sustainability of skills upgrade. ADB especially at the moment we are supporting RDB to train these trainers with the long-term focus of capacity building as well as focusing much more on how to sustain the industry and how to sustain the bank and build up this relationship with customers and the bank. I think this is what I wanted to talk today, and I also would like to offer again to Professor to talk in a nutshell about pricing collateralized loans. Thank you.
Thank you very much, Mrs. Damita. Actually, I have been following up her presentation in the written version. It was very good, and as you can see, but we see that there is some internet disruption because of the connection issue. But I believe we don't have any big problems in understanding the content and Ms. Damita has presented to deliver to us. Let me get back to Professor Han about the questions and at the introductory part, and she throw out. And actually, the general, I think it is what I understand. The question is pricing on collateralized loans, and also especially for the IBK and financial regulation enabling or restructuring, and also the Basel III impact on SMEs, SME financing, and especially specifically for IBK, role of IBK's SME research, and also the funding structure and IBK's consultancy services. And what I hear is that RDB, Regional Development Bank, and especially interested in this IBKs and consultancy services, and I think that comes from probably the RDB roadmap and currently for SME development. So I hope that I can summarize your questions well, but I believe and there is a missing. In that case, Ms. Tamita, you can jump in. So right now, let me ask Professor Han to respond to your questions, and then once Mrs. Tamita believe that pretty much answered well, and then we will open this one to our floor's question, our colleagues' questions. So Professor Han, can you kindly respond to questions raised by Mrs. Tamita?
Yes, I will try my best.
Thank you.
To answer her question on this slide. First one is pricing on collateralized loan. In Korea, for NPL, we are talking about NPL. We have a rating agency specialized on NPL. We have auditing firm which examine NPL status, and we do have a securitization company and securitization market. And as far as I know, in average, the price of collateralized loan in this market is 10% of face value of the loan nowadays. Right? And for the and I also mentioned one more thing. IBK has kind of golden rule for the loan portfolio. 30% comes from the collateralized loan. Another 30% is guaranteed by CODIT, public body. The remaining 30% is unsecured one, right? Let's suppose default only happens from unsecured loan. And let's suppose the default rate is 10%. That 10% comes from 30%. mean 3% default in annual operation. It is pretty much mild one, just 3% out of 100% loan. That's kind of way IBK can handle this default of SME loan problem. And for second one, we have a regulation for restructuring. I can say once a year, Korean finance supervisor body regulate every firm, report NPL loan. And then the supervisory body examine the degree of insolvency of loan, and they grade 4 different scale, and they recommend increased provisions or forced restructure through securitization or other program that bank can handle. In addition, if you go to the last 2 pages, second page of my presentation, IBK's rehabilitation support program has 3 stages, out of which first one is change up is mandated from the government to every bank. Right, this one. Oh, I'm sorry. One slide after this one. Right. And if you go to the bottom, there is explanation about the change up on not that one. One slide before. This one. Right. And right, this is it. If you go to the bottom part, there is a change of fast track and pre-FTP. And out of 3, change up is a restructuring program mandate to all the domestic banks, right? So this is a kind of financial regulation enabling restructuring. And your question about budgetary impact on SME, I summarized at the beginning of my slide, it is adverse effect. So we try to accommodate and loosen the severity of negative impact by expanding category of SME and government recognized internal base rating system of domestic bank, including IBK. An internal rating base system has a room to accommodate SME loan with a good credit. And specific comment, role of IBK SME research, they have a specialized research department as every central bank of every country does have specialized for SME industry. And the funding structure, 50% comes from deposit, another 50% comes from the issuing bond. That bond is guaranteed by Korean government. Right? And last one, IBK's consultancy service. I'm not very good at that one, but if you go to the slide, my guess is 25 or 26. I inserted summarized figure. Yeah, before that. And keep going, please. Keep going. Oh, I'm sorry. It's back. I mean, keep moving. Yeah, keep moving. Oh, it is going ahead. It is not that way. It is about comprehensive consulting service. The page number is 20. Page number 20. Right. Down right hand side, you can see the consulting service. So every SME has a problem on finance, management, accounting, and taxation. Basically, IBK provide consultation service for all these items free of charge to existing customer, right? And their area now expanded to like IP, green startup, and certification and law issue. They provide basically free of charge or pretty much low fee, I believe. But I'm not so sure. If you really want to answer to that question, you can ask through the ADB to the IBK IR department. I think then you can get a more detailed answer from there. Yes, I think that's my short answer.
Yes, Professor. Thank you very much.
You're welcome.
Yeah, yeah.
Thank you
Well
very much.
understood. Thank you very much.
Mrs. Damitha, it's all answers are okay right now, and I know you have a further questions, and we can connect, you and to Professor Han, and also if you can, through IDBK directly, we can help you.
Thank you very much. Sure.
Thank you so very much. Okay, let me open the questions. Let me open the floor for our colleagues' questions right now, and any comment. Okay, so you can raise your hand. I can see over the screen and who raise a hand. Let me see. Anybody has a questions, and please raise your hand. I can accept the two or three questions at the moment before we go to the session 2. Okay, Jung-won.
Oh yes, thank you, Dr. Lee. Can you hear me?
Yeah, I can hear you.
Yes, I'm John Lee from ERCD of ADB. Actually, yes, I'm come from Korean Financial Supervisory Service. So yeah, as I wrote on chat box, I have one question regarding alternative scoring system of SMEs of South Korea. Actually, yes, a financial regulator, FSS Korea and FSC government body introduced a new alternative credit scoring system for SMEs of Korea. So it is called relationship-based and or technology-based credit scoring system to reduce the amount of secured loan for SMEs. But as I know, there's some limitations. So I'd like to ask, do you have any ideas or do you have any opinion on current information on current status regarding the alternative credit rating system for SMEs to reduce the risk premium?
Thank you, Jong-un. And so this question is for Professor Han, right?
Oh, yes, right. Yes, right.
Okay. All right. Professor Han.
I'm puzzled because he mentioned his status from FSS, right?
Yes.
Yes, right, Professor.
FSS.
Supervisory body, and you mentioned you don't have very detailed data on this CS system.
Yes, right.
So actually, it's hard for me to answer, right? That's kind of problem to me.
Yes, I have a one. Okay, then. So IBK, yeah, it is one of the main body to deal with SMEs loan in South Korea, and they still have a large portion of portfolio regarding SMEs, right? Am I right?
Unsecured loan.
Yeah, unsecured one, as you mentioned, the 30%, right?
Right.
So I guess, yes, regarding the unsecured loan, they have some, best practices to loan review or scoring system.
Yeah, they do have.
Yes,
I can give you some idea.
Yes, you're right.
Professor Han.
If I speak,
actually, that was also my question, because unsecured loan in their portfolio is 32.3%. And also SMEs, in Korea as a whole, also more than 39%, right? I think you mentioned about IBK share in unsecured and in Korea is also 39.1%.
Right.
So that means because of the size, because of the experience specialized, and they should have established their own way of alternative way of the credit scoring. And given the current established system, and as you already mentioned, the MPLs and credit ratings, pretty much outside available by ADB, outside of the IBK, but IDBK should have established their own ways. That would be, I think, is giving lots of implications to other developing countries' SME institutions. So can you kindly share with us?
Right. Let me give you the idea I'm understanding now. You need to think about the golden rule I mentioned, right? 3-3-3, right? So the first three is supported by collateral, right? So we don't need to worry about this one. And there are two other 30%, right? And first one is secured by credit. So IBK asked the borrower to get a guarantee from coded from the worst part of their loan, the part they cannot estimate the risk, right? And the unsecured one is a better one compared to coded guaranteed one, right? So this is not the worst one. This is like medium-sized worst one. Out of this, delinquency ratio cannot be above 10%. That's the kind of magic. Frankly speaking, that's the scheme I believe. And also, they are specialized in SME financing, right? Actually, there is a kind of complaint from other commercial banks to code it. Every commercial bank pays regularly every year fee, right? That fee, half of the fee is directed at the end of every year to IBK. I don't want to mention about this one, but to Korean shows interest in this one. That's why I'm talking about. Then you, I think, sure enough, understand.
Okay, thank you. Thank you for the answer.
Thank you, Professor Han. And I think it is also related to their own assets, and I would want to call it, it's a data assets, based on their building digital infrastructure,
right?
Which is including their very decade-long, their SME customers' data.
Right.
So they don't, not only they're looking to the SMEs assets in terms of collateral format, but also non-collateral assets, and they probably has some ways to look at the value of the non-collateral assets.
Because they have the
and
biggest
as you already mentioned,
data set.
Yes. So that data set probably in this pandemic era, because of the importance of the digital infrastructure, which can be connected to boost financial inclusion, that may be also the very interesting. So if you have anything know about their, customer data, how it can be utilized for boosting this SME access, that can be also very helpful.
Right, but strictly speaking, I'm not a government agency, right? They only provide the key data to the FSS, like Jungwon-Lee. And if Jungwon-Lee has a chance to look at, then I may have a second chance.
Professor, frankly speaking, we can look into the specific data because it is quite closely related to the profit of each bank. So,
right.
As for us, we just high level of data. We just look around high level of data and just internal control regarding the credit scoring system, not the detailed one. Please understand it.
Right.
Okay. Thank you so very much, and questions and the responses. And I know a lot of interest in the questions also are there, and including this digital platform and digitized infrastructure, which can help SME finance, and also the collateral issues and scoring issues. But we have to go ahead. So let's discuss later, and we're going to provide additional information. And if you need, then the related to this presentation. Let's move on to, if you don't have any more questions, I'm seeing my screen, and I see that no more hands raised right now over the screen. So let me move on to session 2. Session 2 is it'll be presented by Professor Rebel Cole, Department of Finance, College of Business, Florida Atlantic University in the United States. And he holds a PhD in business administration with a concentration in finance from the University of North Carolina and Chapel Hill. He also has a bachelor's degree in economics from the same university. And he started his career as an economist in the Federal Reserve, where he worked in the banking supervision and research department. Since leaving the Fed in 1998, he has served as a special advisor to the Asian Development Bank, also to the International Monetary Fund, and also the World Bank and other non-governmental organizations, providing training and technical assistance to central banks around the world in more than 60 countries. His primary areas of the research are corporate governance and entrepreneurship, financial institutions, and the real estate. Let me just give you a little bit of story related to the presentation. We always prepared alternative way of the format to present. That means we have a real presentation on a real-time basis, but just in case, because sometimes internet connection is very bad, just in case, we always prepare the sort of the video clip, and so that when internet connection becomes very bad, and in that case, we're going to use this internet connection, the video. And then yesterday, when you prepare that the video, yesterday we received a urgent call from Professor Cole, and he remains hospitalized right now. He could not get out, and he has a little bit of health issue. So we would like to run this video, and we are very grateful for the our preparation. So we will run the video, and which we made and just in case, but we are going to share the video, and also we are going to share his presentation and after this webinar. And so I want you to have a very generous understanding for this urgent situation. Okay, and then today we're going to have a discussant, Manohari, our dear colleague Manohari. So let me ask my team to run the video for 25 minutes. Team, please run the video.
Yeah, we are trying.
Government interventions to overcome the impediments to access to credit for relatively opaque SMEs seeking capital. One permutation is exemplified by the case of the U.S. Small Business Administration. Song-Soo, the presentation does not show the next slides, and also audio seems to have some problems.
Yeah, that's actually what I'm understanding as well. So actually, we are ready to share this. Recorded, the presentation by Professor Cole to all audience. So it might be better to share that recorded file to all attendees instead of display here.
Oh, okay. All right. My colleagues and I have to apologize to everyone. It looks like the audio files and video files, our prepared the video doesn't seem to work right now. As the team mentioned, we're going to share the PPT and also the video file. And because of this unexpected situation, I think it's better because our discussants, the Manohari already prepared the discussion presentation. So maybe it's a good idea for me to introduce Manohari and then ask her to share her comments on the session to presentation. And I want to apologize to everyone for this inconvenience. So we will share right after the seminar. We will share the presentation file and also PPT file and also this recorded the video. Manohari, I think we have to manage right. Manohari, can you please let me introduce Manohari. Manohari is financial sector specialist in the South Asia Department of ADB. She's currently working for lending and technical assistance projects in Sri Lanka, Bhutan, and India in the areas of MSME finance, financial market development, and industrial development. All year, she worked for the Non-Sovereign Operations Department of ADB, where she was managing portfolio of the private sector clients, multiple countries in South Asia, East Asia, Central Asia, and Southeast Asia. She's also an experienced banking and the financial professional prior having worked in multinational and the local commercial and the development banks in Sri Lanka. And let me ask Manohari and to share her discussions on the session which supposed to be presented to us. Manohari, can you please come in?
Yes, of course. Good afternoon, everyone. Thank you, Juntyu and the team for giving me this opportunity to be a discussant. Thank you very much for the two distinguished professors, even though we don't have Professor Cole with us, and we are hoping that he will get well soon. I have prepared the discussion points on government lending schemes because that's the kind of mainstay of Professor Cole's presentation. May I just ask you to move to the next slide, Sungsu? I had 6 areas of general questions on the presentation. My first question was, this is a very unique sort of government lending scheme that we don't see in Sri Lanka, which is by nature appears to be a kind of an ongoing scheme. So how would you define a disaster in this context? That is very important because disasters, either they are climate related or they are disease related or they are financial related and many other things. So it was important for us to understand what the definition of a disaster was. And of course, secondly, our question arose from what exactly is the eligible criteria for SME under this lending scheme. I will be explaining to you during my next few slides how important this SME criteria is in providing access to finance so that there's no leakage and there is no lack of coverage for the SME sector. Also, we wanted to understand what is the comparability with other government lending schemes, because there must be other government lending schemes which perhaps are more sort of circumstance specific or ongoing schemes which are sort of like side by side, operating side by side with the scheme, and how they actually manage to avoid the overlaps, which we find very common in Sri Lanka. And the goal for achievement, without the presentation, it is difficult for you to understand what the goal for achievement was. So I will come back to that later during our discussions. I was also very sort of like pleasantly surprised that this lending scheme is able to do direct lending to households. And that means there is a, like, of course, this is a developed country and there must be wonderful infrastructure and administration for you to be able to administer this. Because in a country like Sri Lanka, we do have these schemes, but direct lending to households in a crisis situation has become a challenge. So that was a point of great interest to us. And then wanted to know more about SBIC, which was included in the presentation. So may I just, is it possible, Sung Soo, for you to show the PowerPoint presentation so that the audience can understand what the goal 4 is and what SBIC is, so that the discussion points will be clearer?
Yeah, no problem. Just we are trying to upload the slide. Yeah.
Right.
At the same time, just we share the link, for the recorded slide as well.
Okay, sure. Maybe I will then open the link myself because I cannot share the screen at the moment. Give me a moment. Well, it's not opening for me as yet, Sung Soo.
See that file.
Okay, so if you can just proceed to the next slides. There was a slide on goal 1, 2, 3, 4.
No, just a.
Are you able to move the slides?
And hopefully, we are facing that like goal for SBA now.
Is this goal 1, goal 2, goal 3, goal 4?
Yes.
Okay.
Only thing is we cannot see that slide at the moment.
I'm able to see the slide. Maybe it takes time and due to the speed of internet.
It's a connectivity issue.
Right. Yeah. I'm in the headquarters, so it's a little bit relief of the connectivity.
Right. Hopefully the others can see the slide.
Others can slide this one, mission statement and goals of the U.S.
Yes, we can see. Yeah, we can see clearly.
Yeah. So can you read out the goal number 4, please?
Okay, let me read out the goal number 4. Strengthen SBA's ability to serve small businesses. Correct. Number 1, ensure effective and efficient management of agency resources. Number 2, build a high-performing workforce. Number 3, implement enterprise-wide information system, modernization, and the cost-effective technology.
Understood. So our question was on how the strengthening of SME was achieved. It's a goal achievement and it is the end product, but we wanted to understand from the professor how this was achieved, because it is a series of actions going through the slides, so we'll understand, but the continuing thread and the overarching process and procedures that took place through this scheme was not coming out very clearly for us, so we wanted clarification around that. I can now move on with my presentation, Sungsu, to give the perspective of government lending schemes in the country that we are focusing on today, Sri Lanka, from an ADB perspective. You can move to the next slide. Junkyu, do you think I should share my screen?
It is coming up right now. They are moving the screen. Yeah, just wait a second. Yep.
Sure.
Even in the headquarters, it takes time. And this afternoon, Songsu, can you move to the slide and slide number 37 and then 38?
Yeah. Actually, we are moving it on, but it takes some time. Please and beg your understanding. Yeah, sorry for this.
Okay, we are almost there. This one, former financial system in Sri Lanka.
Correct.
Okay. Yep. Songsu,
Just
don't move.
Right. Just to give a perspective of the financial system within which access to finance to SMEs are provided in Sri Lanka. At the top, you will have the regulators of the Central Bank of Sri Lanka, the Securities and Exchange Commission, and the Insurance Board of Sri Lanka. Surprisingly, though, although it's still a very developing kind of market, and in certain aspects, you will see the capital markets are almost at a nascent stage, Sri Lanka has been able to introduce private equity quite some time back. So we thought it's pertinent to introduce that there are over 40 investment funds currently operating in Sri Lanka, although their reach and penetration to the SME sector has not been at the desired level. You can see that there are 30 banks and 44 non-banks and 4 microfinance institutions operating in this small country. In the capital markets, the Colombo Stock Exchange has been able to introduce 3 boards of exchange, the main board for the big corporates, Dirisavi, which literally translates to strengthening the SME sector. And Empower boards have been specially set up to facilitate SMEs to access equity markets. At this point in time, Empower board has not been able to list a single SME, but we have a number of SMEs listed on the Dirisavi board. If we move on to the next slide. I hope everybody can see this. We wanted to give a snapshot of the government lending schemes in Sri Lanka. It's important to understand that the Sri Lankan economy went through a 30-year war, and the worst affected sector during that time was really the SMEs from all kinds of sectors like tourism, garments, etc. So during this time, there were many schemes that came into being through the government. But ones that were lasting and ones which are around still are the new comprehensive rural credit scheme. Then we have a number of donor-funded lending schemes from the likes of ADB, World Bank, KfW, etc. We have very limited credit guarantee schemes, and that is an area where ADB is doing some good work with my colleague Takuya. Then we have interest subsidy schemes. So these are like 4 pillars of government lending schemes which are always present in the system. Post-COVID-19, the government introduced liquidity facility to contractors and suppliers of the government. And they also introduced through the Central Bank of Sri Lanka, the Saubhagya COVID-19 Renaissance Facility. Relief measures to assist COVID-19 impacted businesses were introduced through the banking and non-banking system. I will talk about that a little bit more in a while. And there was a short-term refinance facility to COVID-19 affected businesses and individuals. So the central bank's biggest intervention and the government's biggest intervention has been through the banking system and the non-banking system during COVID-19. Here, as far as the SME sector is concerned, one of the biggest issues that the country faced and are still facing is the risk aversion, which has actually increased post the COVID-19 crisis. One of the permutations introduced through the relief measures is that you can extend assistance through this scheme to clients who were performing at the time of COVID-19. Now that actually narrowed down the universe somewhat for the banks, and the assistance percolated in a manner that sort of left out some of the SMEs. So the government has now recognized this issue. There have been increased liquidity in the market, and incentives are being considered to be provided for the banks to lend to this sector who have been excluded from the COVID-19 situation. If we can move to the next slide. Hope everybody can see the slide.
Yes, we can see.
Great. This is the current available overview of the corporate sector in Sri Lanka. The information is not very updated, but this is the best we could get in terms of accuracy. So if you concentrate on the box which has been highlighted in blue, you will see that roughly about 80,000 establishments are in the medium, small and micro category, and employs around more than 1 million people. But if you look at the informal sector, that's nearly 1 million companies employing about 526,000 people. So this gives you a perspective of access to finance by the SME sector in Sri Lanka. The informal sector, the number of establishments is clearly much more than the registered SME establishment sector. And this sector resorts to high cost lending. And I'm also perhaps elaborating on what CEO Damita of RDB mentioned about high cost of lending, even with collateral, even in the formal system. So the challenge for the country through various interventions, through institutions, is to make sure that this informal sector is formalized and have access to finance at a rate that the businesses can afford. Next slide, please. I would like to wind up the presentation by letting the audience understand how ADB has intervened and supported SMEs in Sri Lanka. Our ongoing assistance, there are 4 areas where we are assisting. And if I take your mind back to our financial system, it will be very apparent to anyone that capital markets need to be developed so that access to SME finance doesn't come only through debt financing. So this is in the process. My colleague Takuya is processing that transaction. And we are also in conversations with the government to introduce a credit guarantee scheme. The legality and the modality of this institution is under discussion. Now, this is a dire need for Sri Lanka to increase access to SME financing, to give that confidence to the lending institutions in time to come, to avoid adverse selection, improve underwriting skills by introducing this credit guarantee scheme. Coming to the first and second point, our active intervention with Regional Development Bank goes beyond actually giving only funding. In fact, it was a unique transaction where we were able to boost the tier 2 capital of RDB at a time where they needed to boost capital to expand their lending capacity. And today they are well over the regulatory requirement of capital, which gives them the room to grow and cater to the SME sector, which is their core sector. And I'm happy to say that RDB is the premier government development bank today. And there are plans afoot by the current government to escalate the SME sector business in a, let's say, accelerated fashion, so that RDB can be a co-partner in countries' SME development. Our second intervention is the SME line of credit, where we were able to use a model to attract a number of participating financial institutions to provide financing at comparable costs, because ADB, we are always mindful that we do not distort the market. And here we have private sector banks, which perhaps don't have the portfolio characteristics that RDB has or the reach that RDB has, but still they have good SME portfolios, and we have been able to use these institutions to cater to the SME sector. Next slide, please. As DG Ken commented, Fintech innovation in the SME sector is something that is sorely felt in Sri Lanka, because we feel that it will reduce high intermediation costs. If you look at the industry metrics and do an analysis of the Sri Lankan financial institutions, you will still find that compared to the region, their intermediation costs are still high, which requires them to have higher net interest margins, and it becomes that cycle where pricing needs to be high to the SME sector to make it a profitable transaction. So ADB, as well as the government and the financial sector, are looking closely at how fintech innovation can develop access to finance sector and reduce high intermediation costs, because it helps to reduce funding mobilization costs, widen the reach. As far as RDB is concerned, at the moment we are engaged in a digital finance survey to understand how best people can be people use fintech in terms of giving funds to the bank, in terms of borrowing from the bank, to decide the best fintech applications for RDB to use in capturing their customers on both sides of the balance sheet. There is also possibility of enhancing the capacity of fintech regulatory framework in the country, which will enhance business opportunities. Currently, the central bank has set up a fintech regulatory sandbox, and to our knowledge, they have received many applications, but a lot more work needs to be done. This concludes my presentation, and in the absence of Professor Cole physically, I just would like to give the floor back to Junkyu to understand how best we could address the discussion points that I brought up in my presentation. Thank you again very much for this opportunity.
Thank you very much, Manohari. I think it is also the very good discussion presentation, and we also happy to hear about those ADB's current intervention, and we also work together, as you know, for these work. And one of the things is also I'd like to highlight that financial sector groups, the latest knowledge work on policy credit guarantee scheme policy briefing will be coming out very soon. And this is really, I believe that it is going to provide a very practical knowledge about how to set up and how to make the governance of the credit guarantee and how to make the operationally the efficiency for SMEs. I think that is one of the things that I'd like to highlight. And second thing is that you mentioned about the fintech regulatory framework, and we are also currently in the final stage of the drafting. It is already drafted. We already submitted this one, but in the final stage of the publication of the fintech policy toolkit. So we believe in those, our collaborative work outcome and would help out our ADBs, the OD colleagues. Okay, it is unexpected situation to see Professor the Cole's sudden non-presence for this webinar, and also our prepared video also did not run well, which we don't understand. It's a technical issue, and we already ran the video yesterday, the day before yesterday, 2 days at our mock practice. It ran very well, and video, audio, but today's, I don't know. We don't know. It's what's the current situation. And so let's do this. We have the questions raised by Manohari already. It's very good questions. And so we will definitely deliver those questions, and then to Professor Cole, and then depending on the Professor Cole's condition, health condition, and within a appropriate time frame, and let us deliver his written answers if he agrees, and to all of our colleagues and who participated today for transparency matter and also for knowledge sharing matters. And as you know, this SME financing, and though it is a part of this SME financing series of the webinar, but this is very, very important and for our operation and also the knowledge products. So let us share these questions with the Professor Cole, and then let us get back to you within a timely framework. And then let me just, I think, let me just open anyone, our colleagues, and have any questions and for Professor Cole, even though the Professor Cole is not here, any questions so that we can deliver. Anyone? Let me see anyone raise hand or not. Okay, so we have many things. This is very important topic, as we already agreed. It's especially for Asian DMCs, and becomes all the more important given the pandemic challenge. So we will continue to work together with our operation colleagues and also our knowledge department colleagues to sharpen our knowledge support for operation. And let me quickly wrap up today's lessons. First, to overcome the impediments to SME access to finance, government can consider an option to set up specialized banks to provide credits to SMEs. And this is what the Industrial Bank of Korea has been doing for decades. We also learned the various specific strengths with the records of the Industrial Bank of Korea, providing their access and also the service to SMEs. And the second, governments can also consider setting up specialized government entities or government sponsor entities, such as providing loan guarantees to SMEs that apply for credit from financial institutions. And the U.S. Small Business Administration, SBA, has had a considerable success in this area. I hope these practical case studies will be useful in helping our operation colleagues devise better support programs for SMEs in Asia's developing countries. And SDCC Finance Sector Group will continue to research and share best practices and effective cases to support SME financing for developing countries in Asia and Pacific. Once again, thank you so very much to our distinguished speakers and also our distinguished discussant. Especially special thanks goes to Mrs. Tamitha, taking your precious time and to have a discussion, to join the discussion with us. And thank you so very much. And also our colleagues in Manohari. And also another special thanks to go to DG Ken and to give us the opening remarks. And also the director Sabi. And thank you so very much for having this discussion and towards the making this the joint webinar. And I wish all of the best to you, and I wish you stay healthy and very well. And please have a great afternoon in Manila time, or great morning or great evening around the world. And thank you so very much. And we'll see you later. Thanks. Bye-bye. Bye.
Thank you.
Thank you.
Thank you very much.
Thank you, that colleague. Thank you.
Thank you, Professor Han.
Thank you, Senior. 감사합니다.
감사합니다. Thank you. Thank you, Song-Soo. Thank you, Hyung-Chan, for the preparation.